Good morning, everyone. This is Srikanth Rajan, and welcome back to the Stock Market Podcast from MPIinvest.com. Yes, with the background, you would have understood that I'm back to Bangalore and in my office, and we are back to the regular track. So now, coming to the market, I would say I should talk about last 2 days because what happened day before yesterday. So day before yesterday, we could see first of all a very strong close above 18,000. So that itself was like a breakout. It was breaking out from that huge, pattern that it was following. In fact, I would like to show that sometime, or probably you should look at the chart. Just take the daily chart of Nifty, and if you look at the trend that has been following, there has been a clear breakout that was seen. So naturally, there was as discussed in the last podcast, 18,000 when it was broken on the higher side was a very important level to be watched out, and there was some positivity to be looked at. So technically, Indian market are looking like it is breaking out. But will that actually happen? And what were the reasons that the market actually fell yesterday is something that we will discuss in this podcast today. So after the Indian markets closed, the US markets opened, and there was a big rally in the US again, led by the tech stocks. We could see US markets closing in the green, and naturally that led to a gap up opening yesterday. And not only did the gap up opening not sustain, but also we could see one important thing, that was the VIX was trying to rise slightly. But then if you see what happened yesterday, the market of course opened with the gap up, then went on a big rally upwards, and from there it was a continuous fall till the end of the day. Now the interesting thing is, yesterday both the institutions have bought for almost 1,500 crores each, which is a net buying of almost 3,000 crores. Then who sold in the market? So of course, like I always say, the expiry date trend cannot be seen as a continuation trend, but we need to look at it as a one-off case. So similarly, since yesterday was the expiry, it could be considered as a one-off case. But then we could see that the market was very volatile. It came down, then again tried to go up, but then again that did not sustain and fell down, and it finally closed below 18,100. But one good thing is that it has been maintaining the level above 18,000 in the last 2 days. After Indian markets closed, what happened in the US market? In fact, the US market yesterday opened in the green. They were looking good, but then today morning when I woke up, it was in deep red. So what happened overnight is something that I would like to discuss now. So there was this data which came in, which was the producers price index, PPI, producers price index. So this is similar to the WPI, wholesale price index in India. So this shows the kind of variation the prices have had at the manufacturer's level. That can actually give us an indication of how the consumer price index can appear in the next month. See, if the factory itself has raised the prices and selling at higher price at the factory manufacturing level, naturally the market is going to consume at that price. And when that happens, the next month consumer price index, that is the inflation data, can go higher. So as soon as PPI came higher, in fact, last week we did speak about the inflation also. The inflation came higher, and we could see the US market kind of rubbing it off as a one-off case. But now when the PPI index also came higher, that was not by a small margin, but almost 0.7%. That was like huge. So we could expect a 0.5% increase in inflation data next month. And with this, the market was kind of spooked that they can actually see more rate hikes by Federal Reserve. So this actually led to a fall in the US market. We could see all the three markets down by more than 1.5% yesterday. So naturally, when the US markets are falling, the Asian markets tend to fall and follow the same. And we are seeing the SGX Nifty already trading in the red today. So SGX Nifty is already trading a negative, I think. So we could see another gap down opening today of at least about 50 to 70 points. So that's something that we could be looking at today. But then, like I've said, the technical hindrance has been broken. So, the markets, there are chances the market can see a positive buy trend. So, if at all the market opens with a gap down, there are high chances that it can recover from the down. That is one important thing. The next important thing, the FIS have been continuously buying an Indian market for the last 5 days continuously. So, if at all they continue to do that today, when the market opens gap down, they might take an advantage, and that could actually probably trigger a rally upwards from here. But however, unless the market actually closes higher than 18,100, we can kind of be assured that the market may not go higher. But if at all 18,100 is crossed and closed today, there are high chances that we could see a continuation rally in the upcoming weeks. So these are few analysis that I am thinking. Again, let me remind you, I'm not a SEBI registered analyst, but I trade and invest for myself, and I'm sharing this with you for knowledge purpose. So these are things that we need to look at. But apart from that, there's also good news. The good news is that the government of India has actually reduced the windfall tax on crude oil. This can be seen as a positive for the Reliance. So in fact, if you see last 2 days, Reliance has been on a beautiful positive move, and it is looking like the Reliance is finally breaking out from that long consolidation. If that happens and if Reliance starts moving up, there are again chances that the Indian market can go up. Another important thing that we need to notice is when last month the entire global markets have gone up, Indian markets have only consolidated. So there is a lot to catch up. So in spite of US market falling, there are chances that the market can go up. So like I'm just summarizing what we discussed, there are high chances Indian market can recover from the bottom if the market opens gap down. However, these are just higher chances, and doesn't mean that it cannot go. There are many times when market goes against our analysis also, but that is how the market is. Nobody can ever predict the perfect market, but then there are high chances that the market can actually recover from the bottom is what I feel. And of course, one important thing that I always say is, if the market goes higher, we enjoy and book some profit. If the markets go lower, we use the cash to buy some good investment. So that's what I do, and that's what I share in my community. So if you're not a part of the community yet, of course, do join them. It's completely free, of course. All you need to do is just go to description and click on the WhatsApp link to message our team, and they will help you join. Or you can also just send a WhatsApp message on the number mentioned in the scroll here, and our team will help you join the community. So that's it for now. Looking forward to a good day. In fact, it's a weekend, so it's the last trading day for the week. And looking forward to meet all of you MPA community members on Sunday at the Sunday meeting, where we can discuss in detail on things that happened this week. So that's it for now. Goodbye. Have a great day.